Okay, let's begin. Thanks everyone for joining Verifi's latest webinar today. You are encouraged to ask questions throughout today's broadcast, and you can do so in the Q&A box on the right-hand side of your screen. There will be an interactive Q&A session at the end of our webinar. Also, please feel free to download our CE 3.0 Frequently Asked Questions document in the Resources section just above the Q&A box. Today's webinar is being recorded and it will be made available to everyone on the call after the broadcast. Over to you, Sarah.
Thanks so much, Peter. Welcome to our webinar, Removing Noise from the Dispute Experience. Verifi is thrilled to continue delivering our webinar series. My name is Sarah Craven and I am the CEO of Verifi and lucky enough to be moderating this webinar today. Just a quick introduction for you on why we are here. The payments ecosystem is innovating new technologies and advancing rules and best practices to remove unnecessary disputes from the ecosystem. The ultimate goal is to improve the overall process post-purchase experience for sellers, acquirers, and processors, and ultimately to solve a few key issues: combating friendly fraud, resolving disputes before they cause downstream effects, enhancing the customer experience, leveraging data to prevent disputes, and utilizing technology to remediate fraud and dispute ratio risk. Ultimately, the goal is to support a dispute ecosystem that drives reduced volume and minimal impact to stakeholders. Now, let's start by introducing our amazing panelists, all of whom are experts in disputes across Visa, Verifi, and Sony PlayStation.
Vivek Das, I lead the pre-dispute products of Verifi. Been in the payments industry for over 17 years now. Very excited to be here.
Hi everyone, I'm Natalie England. I'm a member of our Global Risk Ecosystem Partners team. I've been with Visa for about 10 years now. As part of my role, I work to address the ecosystem fraud pain points faced by our clients, one of which, a large one, is first-party misuse, also known as friendly fraud.
Hi, my name is Brian Collin. I work at Sony PlayStation, a payments risk strategist. Been with PlayStation for about 10 years. My role involves kind of keeping one leg in the payments world, one leg in the fraud world to kind of balance that accept and risk area.
Hello everyone, I'm Rob Moran. I've been with PlayStation for about 5 years now, in charge of monitoring and operations for fraud mitigation, also supporting Brian for chargeback disputes and chargeback mitigation, and also supporting operational needs for data science and customer service.
Thanks so much for the great introductions. Now, let's get into the good stuff. We all know disputes have been around for quite a while, and the industry is seeing huge technological advances and rule updates to evolve the experience and remove unnecessary disputes. With these advances, it's critical that innovation in disputes is focused around providing an overall positive cardholder experience where possible, and providing efficiencies when it makes sense. One area that we are seeing increased focus from consumers is the post-purchase experience. Consumers are seeking better engagement with merchants not just during the sales process, but also afterwards. This includes everything from customer service to upsell marketing, and when something goes wrong with the purchase, the dispute or resolution process. Research shows that retailers are losing nearly 1/4 of their customers per year due to a poor post-purchase experience. All that being said, we are here today to learn how merchants can balance the scales of retaining great customers, protecting themselves from losses because of disputes, and removing unnecessary disputes from the payments ecosystem. Post-purchase dissidence is defined as the dissatisfaction a consumer experiences with products after they purchase an item. This often leads to first-party misuse. First-party misuse is also known as friendly fraud. It is a type of fraud most merchants experience when legitimate and authorized purchases are disputed by your customers. Over-communication with customers, sharing details of their purchase, providing emails with receipts, and access to information or delivery information can help to ensure that a consumer remembers a particular purchase. Having this data handy also helps the merchant to support the consumer in the event the consumer ultimately wishes to return the goods or services, thereby avoiding the dreaded dispute. Brian, Rob, bearing all of this in mind, what does Sony leverage in order to work with its customers through the post-purchase journey when needed?
Thanks, Sarah. That's a great question. On the PlayStation Network, we do have the luxury of having customers who are highly engaged. Everyone has an account. That's how they exist on our platform. And in looking at that account, we can see their complete purchase history when they do make a purchase, and invoices sent to them immediately. And we're also very engaged as far as communications through our app and through email advertising. We know which titles, which games customers are rabid about or tend to play a lot, and we can reach out to them regarding those titles. And we can also, when we're reminding them of their purchase, we know if it's consistent with their history, and they should recognize that easily as well.
Yeah, I mean, I think that's a really good point, is that it's about education. It's not just about taking what's being said at face value and actually trying to educate the consumer on what they purchase, how often they purchase the same game over and over and played it for hours on end, and why suddenly is this a problem, right? So it's part of that is the education of customers, whether that be through their receipts, through emails like Brian said, and also just using FAQs to educate customers on how their information can be viewed by them to validate their purchase history, their play history, etc. So all of that is important, and I think it's creating that engagement through different avenues provides education for customers, which I think is critical.
Awesome. Thanks, Rob. So it sounds like you have quite a robust system for sharing information with good customers and getting them comfortable with what and how they've leveraged your system. But can you and Brian share how and with what information you prevent bad actors from continuing to use your system?
Well, yeah, one of the ways that we address this is, if there is a chargeback, we will ban the account, which, in the case with the customer, they're going to call us and we're going to take care of it. If it's a bad actor, the account remains banned until any other action has been taken. If it was an account takeover, for instance. Otherwise, like in the case of first-party misuse, we would expect to call and settle that debt chargeback to get their account unlocked. And we're, continuously monitoring the customer activity. So if there is, a first-party misuse claim, we can see, is this consistent with what they do, what this customer does on our platform? And if it is, then we will address that with them, and usually get them to recognize that, oh, this was a purchase that I made.
Yeah, and I think that, in addition to some of those mechanisms of monitoring, to Brian's point, it's this constant loop of data to really understand the citizenship of the customer and the behaviors of the customers, and do they have a propensity for charging back constantly? Those folks might be looked at differently if they're constantly claiming fraud when we can clearly see it's not, right? So for us, building those feedback loops is all part and parcel with like the education and trying to change the behavior of customers that are constantly doing first-party misuse. Because it has a ripple effect that we'll get into later into different parts of the business, but it's something that I think is extremely critical to stay on top of.
Thanks, Brian and Rob. Sony clearly has strong protections in place for its business, but also focuses on improving the customer experience. Not every merchant has the same protection capabilities or customer experience priorities. For those merchants, there are a number of options available to them when they're building their payment and dispute strategies. And I believe these are going to vary based on industry, product, pricing amount, and their business model. From pre-authorization fraud scoring to advanced authentication, merchants often choose to build or buy in order to protect themselves and provide a sense of safety and trust with their cardholders. Rob and Brian, from Sony's perspective, can you share with our audience how you protect your business from fraud and dispute?
Yeah, Sarah, that's another great point. Our attitude towards what we're doing to protect ourselves from losses and to protect the consumer experience is leveraging the data that we have. I mean, that would be the main point that I'd make to merchants is, no one knows your data as well as you do, and you should leverage that at every chance. I mean, if you're using third-party solutions, try to avoid the assumption of just plug and play. This is going to take care of any issue that might arise because it's really dependent on what the customer path is. And, as I said, you're going to understand that, way better than, any tools you might be using that are.
Yeah, I absolutely agree. I mean, I think that, we as PlayStation know our customers better than anyone else does. Just like whatever merchant out there knows their customer base better than anyone else does, better than a third-party tool. However, I think what's important about some of these third-party tools that it helps you accelerate the understanding of your customers and actually empowers you to maybe look at things in a different way that you might not have before. And that's what we found value with some of these third-party partnerships that we've had for chargebacks and dispute mitigation and things like that, because it gives us perspective that we might not have thought about before, or a different way to look at the data. Because yes, we know our customers better than anyone else possibly could. However, using these tools, I think, empowers us to look at new ways to understand our customer behaviors, especially with first-party misuse.
Thanks again for the great response, Rob and Brian. It sounds like Sony really spends time to assure that it's leveraging its customers' data to provide it with a positive post-purchase experience, especially when those post-purchase issues arise. That said, I would love to know how Sony handles disputes, and what is the internal sentiment around the post-purchase experience? And as a follow-up question, it would be great to hear your insights into what you feel are the most important things that card networks can do to help merchants combat friendly fraud.
Well, one of the things that we do is, we have pretty extensive discussions with issuers. Our outreach in those terms is, we try to be super proactive. And the feedback that we've gotten from the issuers on evidence provided, especially in the case of the first-party misuse, where, hey, on our platform, it looks very obvious that, this person has acted one way throughout the history of their account, and then, all of a sudden they dispute one of these transactions that they've done, dozens or hundreds of times over the tenure of their account. And the feedback we've gotten is to just keep it simple. Don't send us every data point you possibly have on this customer. Don't send us 50, send us 5, for example. Not a lot, but for this example, it works. Say, your merchant name or descriptor with a product name, what they purchased, their account username. That's a very effective one. That will jog somebody's memory very quickly. And as far as deciding what we're going to represent, we've found over time, relying on chargeback codes as an indicator isn't really effective. We miss a ton of fraud. We miss a ton of first-party misuse in doing so. So, we represent aggressively. and in looking at the data that comes back in, we can easily, shift down to a more granular approach. We see, patterns within the patterns and look at what our win rates and transactions they're being won, and use that to inform the data to use. And when you think about it, our business model lends itself to a very high level of first-party misuse. It's also a way for fraudsters to monetize stolen credit cards or ATO or true fraud. But those issues can be addressed through our risk engine. There are flags and signals that we can pick up and address and shut down. But with the high level of FPM that we have, which can be 70% of our total fraud and chargebacks, which puts us constantly in a state of worry about exceeding the network risk limit. I mean, you think about it, we could be starting 50 basis points in the hole versus the Visa or MasterCard limits every month, and have not a lot of slack to play with, which could lead us to get over conservative as far as what we're risk decisioning, which is not good for anyone in the ecosystem. Not good for our customers, not good for us, and definitely not good for the issuers.
Yeah, and I think, one of the things that Brian touches on that I think is so critical for us is that issuer outreach, keeping things simple, because what we learned and getting feedback on our evidence package was that, you don't need these 50 things on here. We just need these 10 to 12 things. That tells a compelling story, right? So for us, it was critical to fine-tune our evidence packages based off of issuer feedback and processor feedback. And it was an incredible way to actually see our win rates start to climb. And even we got great feedback from the issuers saying, hey, your evidence package is a lot cleaner, a lot easier to read, it makes more sense, it's very well tuned. So keeping it simple has been a really good mantra on how to handle dispute packages, because it's easy to just glom on every single piece of data you have, but you also have to keep in mind these issuers are looking at thousands of these at a time. So the simpler you can keep it, the more I think in sync it is with what they need in order to make an informed decision on if this is first-party misuse or not. So again, it goes back to the outreach. And again, it's not just about outreach from an external perspective, but an outreach on the internal side too. We partner with a lot of different teams within PlayStation to understand the dynamics of the data. We sat on the call center floor, listened to phone calls, listened to people, try to commit first-party misuse with recorded calls. And it's fascinating to get that data to kind of understand that behavior of what separates true fraud from a first-party misuse person. So, reach out to your teams. The outreach isn't just with the banks and your payment partners. It's also internally, work with your payment teams, work with your customer service teams to understand that data in a way that allows you to make an informed decision of how to handle first-party misuse going forward. So while we do see a lot of FPM at PlayStation, as Brian has stated, we also have been finding new ways to combat it, and whether that's through education or account locking mechanisms or actually fine-tuning our rules to look for these types of behaviors ahead of time. So it's been a pretty interesting journey for us to get to this point and have the sheer amount of data that we have to better combat FPM.
Yeah, and to get back to Sarah's point regarding the networks, one of the issues that we struggle with is getting the data for non-chargeback disputes, which go into our program numbers, the fraud numbers. Because we have a lot of low-dollar transactions that might fall below bank thresholds for raising a chargeback. And kind of divining that from the acquire data and, what we are getting back to the networks can make it difficult. That's something that we need to manage. It's not like we have a chargeback and this, that's kind of a negative balance on their account. And, I'm sure, this is what we'll get into. The C 3.0 and, the appeal of it is not primarily the liability shift for us. If issuers are fully participating, and, we're on the other side of that, it solves a ton of problems because it facilitates that data exchange in a very kind of normalized way. So what we're talking about and what issuers want to see and what we can provide, getting that noise down and getting to that set that everybody expects to see that's what we're going to. We want to turn.
What an amazing amount of diligence and work Sony has done to address first-party misuse. And our studies are reflecting that first-party misuse continues to grow, so you're not alone with your accounting of 70% of your overall disputes being from first-party misuse. A recent report sponsored by Verifi and the MRC reflected that with the increasing revenue loss due to fraud, along with the desire to optimize customer experience, more merchants are now prioritizing reducing fraud and chargebacks as part of their fraud management. In fact, first-party misuse is a top 5 type of fraud attack experienced by merchants, with 32% of respondents saying that they've experienced friendly fraud. The reports also have shown that 74% of merchants had a formal approach for combating first-party misuse. Not only do these disputes place an undue burden on merchants, it also causes issues for everyone in the payment ecosystem, ultimately driving up the cost to do business. Natalie, you've been leading the initiative at Visa to develop and launch a new rule to combat first-party misuse. In your time within payments, how have you seen friendly fraud negatively impact the ecosystem?
In addition to those negative impacts you have on the screen, it really just drives up the cost of doing business for merchants, issuers, and consumers. And not addressing the issue just perpetuates the problem because cardholders realize they can get away with it, so they just keep doing it, and it just keeps growing. The other thing, especially coming from a fraud perspective, is it creates a lot of noise in the system. So it really distracts us from focusing on the true malicious threats that we all really want to tackle. So.
Thanks so much for those insights, Natalie. It's clear that first-party misuse is causing a number of issues for all stakeholders, and no matter what merchants do, it still occurs. I believe this is why Visa determined that it was time to address this systematically and recently announced a change to their dispute rules, which will be effective as of April 2023. Compelling Evidence 3.0 is being launched to reduce the burden of friendly fraud losses initiated by consumers as fraud disputes. Merchants have historically accepted liability for these disputes, often at a significant financial loss to their business. With Compelling Evidence 3.0, merchants who provide qualified transaction data for prior undisputed sales can shift dispute liability to the issuer. Since I imagine everyone is on the edge of their seat, wondering what it is to be deemed a qualified transaction, let's double click on this for a moment. For a merchant to receive CE 3.0 protection from illegitimate fraud disputes, they must provide a minimum of 2 non-fraud, undisputed transactions that were settled on the same card more than 120 days prior to the disputed transaction. And they must be able to provide at least 2 core data elements from the prior transaction that match with the disputed transaction, and one of the 2 must be an IP address or device ID. These items together are considered qualified transaction data. Now, let's have the expert help us through this. Natalie, can you walk us through an example of how this will all work?
Absolutely, because I know this slide has a lot going on and it seems very complicated, but hopefully with an example and some context of how we got here, it can kind of bring it to life. So just a bit of context, we developed this in conjunction with some of our merchant clients, and we also engaged with our issuing clients because we needed to work with them to make sure what we're providing them, they're on board and agree their cardholder participated, and it's also a package of evidence that they're going to use when they have a cardholder conversation. It's basically set up twofold. The first piece about the historical footprint, so that's having the two transactions that have aged out of the dispute window. So that's how we came up with 120 days, because we don't want an issuer potentially coming back on one of the transactions a merchant's using to protect themselves and saying, oh, I'm claiming fraud on that transaction as well. So to create that historical footprint of legitimate activity, we wanted to move beyond that dispute window. And then the second piece is really about tying the cardholder from that legitimate historical footprint to the now suspect fraud dispute. So with the example here, we have 3 transactions over a period of time with the same merchant and the same PAN, and the cardholder calls up their issuer and disputes the transaction from November 15th as fraud. Now, if a merchant can supply the compelling evidence 3.0 criteria, then they'll protect themselves from the liability of that transaction. So in this case, we have that historical footprint. We have the 2 transactions from June and July that have aged out of the dispute window, and there's no fraud or fraud disputes associated with them. And then we look at the core data elements of user account login ID, IP address, shipping address, and device ID to look for those 2 elements that match across all 3. In this case, we have shipping address and device ID are matching across all 3 transactions. So in this case, the merchant would protect themselves from the liability for the fraud dispute on from the November 15th transaction.
Thanks so much, Natalie. That certainly helps clarify the rule and makes my wording a little less complex. So in addition to what Brian and Rob mentioned, what other data elements should merchants consider collecting to support this rule change? And also, how does Visa envision this improving the dispute ecosystem?
As I mentioned before, when we were approaching this package of evidence, we were partnering with our issuing clients because we wanted to think about what that cardholder conversation was going to look like. To really make a dent in this problem, it's about changing that cardholder behavior. And so in thinking through the additional data that a merchant can supply, it really comes down to what's going to facilitate that conversation, and kind of to Brian and Rob's point, keeping it simple, because an overwhelming amount of information is going to be difficult for someone who's on the phone with the cardholder at the time to decipher, to translate, and really, help facilitate deflecting that dispute. So keeping it simple, really, from the conversations with issuers, we know they're going to be laser focused on these particular data elements because this is what's going to be shifting the liability. And then it's going to be anything that's going to resonate with the cardholder that will help them take responsibility of that transaction. So if your user account login ID is something different and distinct from an email address, but you have that as well, it might be useful because those are data elements that cardholders are going to remember. Because though we're using IP address and device ID or fingerprint, those aren't necessarily data elements that the cardholder is going to recognize immediately. So, item description information, additional context of the transaction, those are things that we recommend. In terms of the impact we expect to see, we have run numbers, and depending on which metric you're looking at, whether you're looking at the dollar impact to what we call our 10.4, our card not present fraud disputes, or the count impact, we're definitely seeing more of an impact based on count, which is telling us a lot of this behavior is happening on lower ticket transactions, which kind of lends itself to Brian and Rob's business of digital goods. And so we see approximately 5% of our 10.4 disputes being potentially impacted by this rule change. And in the world of millions and millions of disputes, we're pretty happy with that. And we do see that concentrated in some particular business verticals. but we hope to, iterate on these rule changes in the future to see how much more of this pain point we can capture.
Fantastic, Natalie, thank you. It sounds like it's been quite a collaborative process as this rule has been constructed and released. Now that we understand what the rule is and how it works, I would love to bring Vivek into the conversation. Vivek, can you share with us a little bit about how merchants can leverage CE 3.0 and enjoy the benefits of a deflection based on the rule that was announced?
Yeah, absolutely, Sarah. Now, compelling evidence 3.0 provides two paths for resolving friendly fraud disputes. The merchants can either participate in the pre-dispute stage, that is before the dispute is submitted by the issuer, and preemptively block the dispute from being raised, or in the post-dispute stage, that is after the dispute has been submitted. Or even better still, they can participate in both for even higher coverage. But in either case, to leverage C 3.0, the merchant will need to send a set of data elements to prove that the person disputing the transaction is a genuine cardholder who has made similar purchases in the past. That is, there is a historical footprint, as Natalie mentioned before. Okay, so let's talk about the mechanics. If they choose to participate in the pre-dispute stage, they'll have to use our Order Insight service. Now, this is an API-based service in which we make it extremely easy for the merchant to provide the compelling evidence data. Here is what we are going to do. We will identify 2 to 5 prior eligible transactions from our database that the cardholder made for the same merchant. That is, these were not disputed and the transactions occurred between 120 and 365 days from the date when the dispute is being raised. Once we identify such transactions, we will send them over to the merchant using our Order Insight API. The merchant, after they receive these transactions, needs to locate them in their database and send us at least 2 of the 4 core data elements from at least 2 transactions from the 5 that we have selected. If they send us all 5, better still. But they use the same API to send us back that data. After we receive this, we will match them against the disputed transaction. And if there is a match, we will block the issuer from proceeding with the dispute. So the merchant gets a positive deflection right then and there. The dispute liability shifts to the issuer. The merchant protects the dispute and fraud ratios and also will not be responsible for any future dispute-related costs. In the post-dispute scenario, follows the receipt of the dispute through your acquirer, the merchant's acquirer. Through the pre-arb process, the merchants will complete a pre-arb questionnaire, including a qualified data, and submit it through their acquirer. Here, the merchant chooses the 2 qualified historical transactions instead of we sending them those transactions. But they submit the same data points as in the pre-dispute case to provide us the compelling evidence package. Once we receive and validate that these are the right data elements, the acquirer then can proceed with the pre-arb submission. So these are the 2 ways that the merchants can participate.
Thanks so much, Vivek. I know that since this rule was announced, we've worked hard to hear the voice of the customer and assure that this would be made available for both the pre- and post-dispute flows. So all of the information you've shared is incredibly helpful. I also understand that during our various collaboration discussions with our customers, we've had quite a few frequently asked questions. To get ahead of what folks might be wondering at this point, it would be fantastic if you could share a couple of those questions with us today.
Certainly, Sarah. So to start with, for some of our clients, this is new information. And they usually start with some basic questions on the coverage of the service, such as, will all card brands be covered? Is the coverage only specific to a region? Am I going to be blocking all types of disputes? So let me start by clarifying some of these questions. CE 3.0 coverage is only available to Visa transactions. It is not available to any other card brand. The coverage is available globally. That is, the issuers and merchants from any part of the world can participate. It does not matter if the merchant has any other service to prevent fraud. such as Visa 3D Secure, they can use that in concurrence with the CE 3.0 coverage. But the important point to note is this service is specifically targeted towards preventing fraud disputes for card not present transactions, or what is known as Visa 10.4 reason code disputes. So these disputes are being targeted by the CE 3.0 coverage. We are also finding a lot of excitement in the merchant community for CE 3.0, which is very encouraging. Many merchants want to get started as soon as possible, but many also are not sure what they need to do to participate in the service. So for all of them, our advice is to start early and start by looking at your existing data capture, data storage, and retrieval policies and practices. They need to start storing at least 1 year of past transaction for every cardholder, if they're not doing so already. They also need to ensure that they're capturing the core data elements for every transaction. If they have any confusion about this or do not know what qualifies to be the right data elements to capture, they can reach out to us and we'll be very happy to give them a clear understanding of what that means. They will also need to integrate to our Order Insight service, as I mentioned earlier, if they participate in the pre-dispute scenarios. If the merchant is already integrated, great. They will need to make a few small changes in the integration because we are adding a couple of new data elements to the API to capture the CE 3.0 data elements. Once they make these changes and test their integration with us, they're all set to use the pre-dispute CE 3.0 coverage and limit their exposure to friendly fraud. There are a couple of other confusions that often we come across, and these may be worthwhile to clarify here. A large number of merchants have customers on a monthly subscription. The question these merchants often ask is, we don't store the device ID or the IP address for every transaction, since these are initiated by not by the subscriber, but they're initiated by us. So what's my recourse? We advise these merchants that they should store the IP address or the device ID, better both, the user provided when they made their first purchase or when they set up their account. And they can use these data elements for all future transactions. These will be considered as valid. We also receive some questions regularly to clarify what is device ID, device fingerprint, account ID, IP address, etc. Can I use the IP address consistently? So let me address some of these without getting into too much into the technical details. A device ID is the hardware identity of the device. So IMIE is a good example of a device ID. IMIE does not change unless you change the device, the hardware, because this is a factory installed unique serial number. So it's mostly a safe bet to store this data. Device fingerprint is a combination of attributes that can also be used to uniquely identify the device in the network. Now, there is no standard way to build it. You can choose from a set of attributes your own set, such as IP address, plugins, VPN and browser information, etc. So by using a combination of these attributes, it's possible to come up with a strategy to uniquely identify a device. So the merchants can talk to their network or hardware experts and come up with a strategy. IP address is also a good way to identify a device within a network. However, IP addresses are of different types and they can be also dynamic, they can change. But while they may change, we expect that over a historical period, the cardholder should have made at least 2 transactions from the same IP. Now, if the merchant finds from their internal data analysis that this is not the case, they can always consider device ID or device fingerprint as an alternative. It depends on the specific nature of the merchant's business, and we recommend that they store all of this if possible. Lastly, coming to the account ID, what credentials can the merchants use to provide this data? An account ID is the identifier using which the user created the account and which they use to log into their account for a purchase. So this obviously means if a user is going through a guest checkout process, it will not qualify because they wouldn't have logged into that account. And the merchant will not receive that account ID in that purchase. Now, sometimes this is confused with the email ID provided during checkout. So in your checkout flow, you will see that for the merchants to contact you, provide your email ID. So sometimes there's a confusion. Is the same thing as account ID or not? So your login credentials can also be your email ID, but these are not the same types of uniquely identifiable data. And so be careful when you use the email ID. It should be the account ID that the user used to log into the account. So these are some of the questions that we keep getting asked, and we'll be happy to provide more explanations as they come our way.
Such great information, Vivek, and I love getting in front of some of the FAQs that are burning questions for folks on the phone. So now that we know how clients are able to obtain this functionality, let's talk about how this plays into the opportunity zone. Yes, you are probably asking, what is the opportunity zone? So let me break this down for you. Since disputes play such a pivotal role in the customer experience, Verifi sees the post-purchase process as an opportunity zone. It is during this time that cardholders call their bank and proceed with disputes that can often be easily avoided. This slide is a great illustration of where pre-dispute solutions fit into the post-purchase customer journey. As you can see, Order Insight and RDR are positioned to support the merchant and customer after the purchase and before the dispute creation. This is often referred to as the opportunity zone, as it helps merchants to resolve a dispute before it occurs. And as e-commerce volume continues to grow, it's critical that customers have trust and confidence in the digital payments experience, and that merchants have dispute mitigation tools to support their growth. Having access to real-time order details and quick resolutions when issues occur builds trust and confidence in the ecosystem, and it also supports scale by simultaneously delivering an improved cardholder experience. Now, just to recap our key takeaways, dispute challenges remain the same, but the way they are being managed is evolving. A positive customer experience in the post-purchase environment will lead to loyalty and less risky customers. However, first-party misuse is a challenge that merchants have had no real mechanism of quantifying or stopping in the past. But the great news is that is changing. Visa is changing the landscape by introducing CE 3.0, and it's time for merchants to begin collecting data today so that they can benefit from this rule change. Thank you to all of our fantastic presenters for volunteering their time and expertise to help fuel a very interesting and insightful conversation on fraud and the evolution of compelling evidence. Lastly, I would like to thank all of our audience members for attending today's webinar. Verifi is super excited to continue bringing thought leadership and industry updates to everyone, and we hope to see you on future webinars. Please continue to send through your questions, and we will now open our QA portal for today's webinar.
Thanks, Sarah. We've had a lot of questions come in, so I'm not sure we'll get to everything, but we'll do our best in the couple of minutes that we have left. Rob, I'm going to throw the first question to you, please. Do you have any advice for merchants to prepare for the changes coming to Visa's dispute evidence rules for fraud reason codes coming next year?
Yeah, hey, and it's a great question. So one of the things that we've really done is partnered with processors, issuers, to really understand our evidence packages and what works with whom, how to pare things down to have the absolute best foot forward when we're providing these evidence packages. It's very easy to have 40, 50 things on a package, and if we can pare that down to 10 to 20 items, let's say, and try to find a greatest hit, so to speak, that usually has bode really well for us with our win rates. And having direct contacts with some issuers has really provided solid feedback on our evidence packages as well. We've also partnered with our customer service teams to kind of understand where some pain points might be, so we can see if it's truly first-party misuse or it's a false negative and false positives, and root things out that way. So for us, we've not only looked to issuers and processors to help us define what a good evidence package looks like, we've also really partnered with a lot of internal teams at PlayStation to understand the data in different ways in order to put that best foot forward when building up these evidence packages for these new dispute codes.
Thanks so much. We've had a couple of questions around the different industries that are most impacted. Natalie, where do you, in your experience, see most concentration around first-party misuse problems?
That's a great question. It feels like it's constantly shifting. Through the pandemic, we definitely saw a broader set of business models impacted with a lot of the, buy online, pick up in store movement, and also delivery. We've engaged a lot with our digital goods merchants and, have talked to them a lot about how this is a big pain point for them. Also with the growth in money movement and P2P transactions. So we've really, in our engagements with those clients, heard that this is becoming more and more of a problem for them. But I also know, as I've been talking about this rule change, there's a lot of physical good merchants that are really interested in this change. So we see it across many business models, but probably get the most engagement directly out of, digital goods and money movement.
Thanks, Natalie. Brian, I'd like to throw a question to you now. How aggressive are you with your arbitration, and what win-loss criteria drives your decisioning there?
That's an interesting question. I think that's very vertical driven. The ticket value that we're seeing on our disputes is pretty low. I mean, a lot of it is in-game content purchases. So when we get to the point of arbitration, it makes no sense economically for us to continue. So we're generally going to not pursue that and drive the costs up. But obviously, if you're in a different vertical and you're dealing with more high-end, value content merchandise, you want to do the ROI calculations and really drill down into your win-loss rates to a granular level. Not sure how helpful that is, but that's what we see.
Thanks, Brian. Vivek, question for you around Order Insight. Will Order Insight systematically prohibit issuers from submitting chargebacks when CE 3.0 is present, or will it simply provide the information in an attempt to avoid the chargeback?
So thanks, Peter. Yes, so Order Insight will systematically prohibit issuers from submitting the chargeback if the merchant has been able to provide the right information, the core data elements, as we mentioned in the webinar. If we receive that information, we will stop the issuer from going ahead with the dispute. So the merchant will have an assured deflection for that specific dispute.
Thanks, Vivek. Natalie, we've had a number of questions around this and some specific information. So trying to give a catch-all question here. But generally, the crux of this question is that friendly fraud seems to be quite unpredictable, and oftentimes merchants lose the dispute. This rule will help remedy that. But can you just walk us through what merchants can do to help the unpredictability, prevent the unpredictability of friendly fraud?
Absolutely, yes. And that unpredictability is really, why we made these rule changes. And it was talked about during the webinar as well, is to start collecting the core data elements on your historical footprint, because that's what's going to be able to be utilized moving forward if there is a friendly fraud dispute that comes in. Also, to clarify, when we think about transactions that would not be able to be used for that historical footprint, only transactions that have a fraud or fraud dispute wouldn't be able to be used for the historical footprint. So I think there were some questions that asked about if there were consumer disputes related to some of those prior transactions. And those transactions, because like the person noted in their question, aren't related to fraud, they would still be able to use that as part of that historical footprint to protect themselves from that first party transaction.
Thanks, Natalie. Vivek, one more for you. Which IP address is required for prior transactions? Device IP, billing IP. Can you walk us through the requirements for the IP, please?
Sure. So the device IP is what the merchant should provide. As I discussed in the webinar, IP addresses could vary. So the merchant has to figure out what is the right way that they want to capture the IP address and provide that IP address during when they submit or when they send the core data elements to us. But it is going to be the device IP that is needed.
Thanks, Vivek. A lot of questions around the benefits of the rule and what it is that it's bringing, what the changes that's being brought to the ecosystem. Natalie, can you walk us through the liability shift when a dispute is deflected with CE 3.0, both in pre-dispute and post-dispute routes?
Yes. So coming from a risk perspective, we're all about trying to remove the noise and also make sure that our clients aren't falling, victim to this misuse. So I'll kind of talk about the pre-dispute space first. In terms of benefits, when the criteria is met, you get the liability shift. Verifi with VRoll is able to identify that the merchant has met the criteria. So the dispute doesn't come in, which is how that liability shift occurs. The dispute doesn't make it into the system. It doesn't affect the downstream impacts of our dispute or chargeback monitoring program. We match up the fraud transaction that's associated with that inquiry and flag that fraud so that it's not part of any of our fraud rate-based monitoring programs or flow into any of the downstream models that Visa uses. And so by sharing that data with the issuer in a more ideal point within that friendly fraud decisioning space before that dispute makes it into the system, then that dispute, deflection and removal of that impact, if you will, from the dispute monitoring program can occur in that pre-dispute space. If a merchant is participating in the post-dispute, the dispute has come into the system, and so that dispute will still be part of any of the calculations for our dispute or chargeback monitoring that Visa does. But the merchant will still get the benefit of the liability switching back to the issuer, and also the fraud record associated with that dispute being flagged so that it won't have downstream implications.
Thanks, Natalie. One question for our friends at Sony, so either Rob or Brian. One question here is, how do you work with the issuers to discuss chargebacks? I mean, the specific question is, how do you get them on the phone? But how long did it take for you guys to build a good relationship with issuers to collaborate?
I can take that. It's it's not easy. I mean, there are some issuers that it's essentially been cold calling. We're reaching out, who has a connection, who has somebody in the Rolodex. But I mean, you'd be surprised. A lot of the issuers are eager to have those conversations. I mean, they understand the implications on their side, especially for us if, there's that kind of roll down effect where if there are chargebacks and we have to tighten up our risk engine and there are risk declines that they never see that might lead to back walleting, that's their worst nightmare. So, once you get involved, once you get a hold of someone who is working in risk, at one of the issuers, they're usually glad to discuss this stuff. And especially now with the evidence package, what Rob was talking about at the top of the call, just asking the question, what do you guys want to see? And then also, reach out to other merchants. I think we should all be able to discuss amongst ourselves, what's working, in forums like this, and then one-on-one.
Yeah, I mean, I think
really
there's nothing wrong with collaboration, right? And passing along a phone number or a contact isn't going to hurt anything. Actually, it all benefits. A lot of us want the same things, and issuers want the same thing, only on their side of the fence, right? They want clean traffic, clean data. They want partnerships, and going to conferences and going to webinars like this and meeting people is kind of how Brian and I made a lot of contacts over the years, just talking to different people at roundtables like this, reaching out. So that spirit of collaboration, I think, has really worked well to build some of these relationships that we have with some of our issuing partners.
Great insight there, guys. Thank you so much. One last question, because I realize we're just at the top of the hour. And Sarah, I'm going to bring you in, please. With the dispute rule change, if a merchant wins the dispute, does the dispute still increase the chargeback ratio in the eyes of Visa?
Thanks, Peter. And if they win the dispute as a representative, it is still going to increase their chargeback ratios because they actively represented the chargeback. On the other hand, and just sort of a tie-in, since I saw that there were a couple of questions associated with RDR, if a merchant resolves a dispute through RDR or CDRN or certain types of integrations of CE 3.0, then it will not impact the dispute ratio. But representing a chargeback, even if you win or lose, will still impact and count against your ratio.
Thank you, Sarah. And thanks everybody for the time that you've given this morning. There's been a huge amount of interest and questions coming through, and we're sorry we couldn't get to everybody, but we will follow up directly afterwards. Please do download the FAQ in the supporting documents section of your screen. It's up on the top right-hand corner. After the broadcast finishes today, you will receive a follow-up email with a recording of it, and we'll make sure that it's available later today on YouTube, our YouTube channel, and on Verifi.com. We also have a number of previously recorded webinars on Verifi.com, so be sure to head there and check out our resources section. There's some helpful information up there too for you guys to listen to. If you do have any further questions on today's content, do feel free to drop us an email at info@verifi.com, or you can reach out to your Verifi or Visa representative. Again, thank you so much. Thank you to our speakers, and we look forward to seeing you all again online in our next webinar. Have a great rest of your day.